every time there is a consolidation, that is when is a better opportunity than scalping in the range. You can see, let me show you a little bit on the ES first, what's happening in the market. When the market moved early in the morning, after that market took a very good consolidation, almost like from here. You can see the sellers stayed on top, even though they're shifting a little bit up and there. They kept their control. They kept their control on the top, and they kept their control in the bottom as well. Market was almost like what, 10:20 to 11:40, 1.5 hours was consolidating between that range. I don't scalp in between, a lot of our customers do. For me, high risk to scalp. The scalpers who does scalp between the ranges, they look for liquidity and then take it down. Liquidity and take it down. But for me, better trade is in the breakout. So I waited for almost like 1.5 hours. Now you can see the breakout happened, and then the price action pushed it down. I didn't take the trade in ES though. I took the trade in NQ because NQ have a longer move than the ES, but it's the same kind of story. You can see the market was consolidating the same time when the market was consolidating on the ES side. This is the sellers, it's a buyer's control, seller's control. Buyer's control, this is where the scalpers come in picture. Every time the liquidity is swept, it goes to the other side. Liquidity swept, sorry, here. Liquidity was strong here. Liquidity was swept. Rejection 1, 2, 3, 4. It moved to the opposite side of the liquidity. It took the liquidity and then came back and took the liquidity here. Took the liquidity here, came back down. This is what they do in terms of scalping between the range. For me, that's a high risk that I don't do. But for me, once I saw the price broke down, coming out of the consolidation, I took the trade, but I had to place my stop little bit higher risk. The reason is that always stop needs to go where the stop needs to go. That's something I teach them all the time. I repeat it every single time. Just because I entered the trade, I cannot put my stop here or here or here. The strong sellers are right here. Okay, the seller's liquidity control moved down right here. That means I cannot place anywhere because the price can still go up and then come back here. That's why I don't want to keep anywhere. I had to hide my stop behind the liquidity. That means if at all price goes back and reverse, it needs to face the hurdle of going through the liquidity before it takes me out. So that's why I had to hide my stop over there. So now I'm in the patience game. Market is negative and positive right now. For me, I want to see how it plays out. Because it's already broken out of the consolidation right here. I just need to be patient in terms of how the price action is going to continue after the breakout. Sometimes the consolidation will shift the range. From here, it's consolidated right here. Maybe it will shift over there, but for me, either way, it's a clear breakout. Price didn't go there. The reason is that this is what I mentioned in the webinar as well. Breakout, pull back to the exact same place where the strongest control was, retested and then moved back. This is what my confirmation was. But again, since there was another bias control, I didn't take the trade here. I waited till, okay, what happens to this control? Again, price moved, went back to the same level and then pulled it down. That's why I took the trade here instead of here. I just wanted like a little bit of confirmation. But just because I took the trade late instead of here doesn't mean I can keep my stop close. So stop needs to go where the stop needs to go. That's why I kept my stop here. So now I just need to be patient and wait and see. Target, I don't really place a strict target because I would like to manage my trade based on how the price action moves. But since the next buyer's liquidity is right here, you can see the green area right here. So price might go to the liquidity. Price always move towards liquidity to liquidity to liquidity. It goes back and forth on those areas. That's what you can see. Liquidity to liquidity to liquidity. Liquidity swept, liquidity swept, liquidity swept, liquidity swept, liquidity swept. This is what like market behaves. Now the bias, this was all broken. The next bias control was here. Even though I think it's something forming right here, that's okay. But for now, I'm keeping my target a little bit, not little bit, much above the next bias control. That means if the price fluctuates, eventually goes here, it will go to that liquidity. That means it has to cross my target so that I can exit. That's why I kept it right here. But for now, I'll be patient in terms of how the play pays out. And also, if you look at it right now, since the starting the stops we have, the order flow zones color coded the bar only yellow and red. That's a very good confirmation that it's still in the bearish trend. If the market reverses, I might say some blues. I need to be very cautious how to manage my trade. But for now, I think order flow zone says it's red, bearish trend, and also the liquidity zone says a consolidation broke out, retested once, retested. Okay, let me show you in terms of what I mean by retested. So I had to open something. All right, so now price is moving, but it's okay. Let's wait. But I wanted to show you in terms of okay. Okay, so let me draw something so that you will understand. Do you see this one, this line, the green control? The price broke out here, all right, and then moved down, went back, and then retested the same level as before the control was. This is the first confirmation. I didn't take it here because it has to move from here. So that means I could have taken the trade here. That means broken down, went back, retested, and then pulled down. This is where I could have taken, but since there was another bias control, I waited for this breakout. That means now the broken out, went back again to the same place, it moved down. So that's why I took the trade right here, as you can see. Anyway, I just want to explain to you the process of how the breakout, price action, retest, and then hockey tick. You need to have the hockey tick. Don't take it right there just because it goes to the same place. You need to see the price action rejects. The price rejects at the same place where the control was. That's why it's a very important trade. All right. So one other thing again is that I wanted to show you the liquidity sweep. People who are scalping between the ranges. Okay, so liquidity sweep. That means price crossed the liquidity. Price action did not. Look at this price action. After breaking, price is moving down. But whereas liquidity rejection candle, rejection candle, rejection candle, rejection candle, 4 rejection candles after liquidity is gone. That's why people take the scalping this way. Okay. Now again, look at this. Liquidity was broken. Rejection candle, rejection candle. That's why people taking this kind of scalping. So I don't take scalping trades. I'm not interested in the range scalping, but a lot of traders do. But this is what they should be following. Wait for the liquidity sweep, wait for the rejection, and then take the scalping trade. All right. And okay, I think the price is moving right now. The same. I don't see any seller's control move down for me to move my stop, because I want to see some more red here, and then I will move. At least I want to see one more pullback, one more lower high. Okay, so right now the lower high is right here, but I wanted to mark like one more lower high. Okay, now you can see that this liquidity was also broken with the momentum. So this is why, look at this, why breakout is more, it's more important to trade than the scalping. Market was consolidating like a sideways choppiness almost like long time today. I didn't take this trade, any trade until here. Okay. Do you see the powerful in terms of how the breakout, if you follow the rules, look at the move it's making right now. Okay, now if I don't move my stop right now, I'll be really foolish. Okay, so now my trade is like a safeguarded. Even if it reverses back, I'm not going to lose anything. In fact, I'm profitable because this range. But I want to see whether the market is going to go to this particular, go to this liquidity. Like I told you, always market goes to liquidity. So when it was consolidating, it is ping-ponging between this liquidity. Once it breaks out, it hunts for the next liquidity. Okay, hunts for next okay, I'm going to close it because it's this is rejection over there. Huge rejection over there. I should be really closing here. I want to see whether it's going to reject or continue. How is the ES looking? Because I love to see the ES. Okay, so see this, I should be closing. Let me tell you why I should be closing. I close right now. Okay, so this is why you need to look at ES and NQ clearly. Okay, ES, same time I took the trade, look at this. Buyers became sellers. Oh, perfect confirmation for my trade. But it bounced on the buyer's control. That means it came back down. If I saw that earlier, that's why I have this view. This is why I have this view. I want to see back together what's happening ES, what's happening NQ. See here, I thought like, you know what, it can come back. But why it was bouncing from back here? It went close to the strongest buyer's control. Look at how much stronger the buyer's control on ES side. It is not easy to break all those liquidity. That's such a strong buyer's control there. So many buyers. Look at the contract sizes. That's why if I didn't have this screen, NQ in the full screen, if I seen this one, I would have exited right here with maybe what, $800. But 550 is not that bad. But I want to tell you why I look at both charts. Yes, just because we have a lot of gap here, I was looking for price will go down to this liquidity and then bounce. But if you look at ES side, it already reached the strongest liquidity. That's why it's reversing. So anyway, that's a very good trade. But monitor both, check for both. You'll have better trade. Always wait for the breakout, price action, retest, and then hockey stick. Hope you have a great day. Thank you so much.